Hey folks, how you doing today? Hope you're doing well. It's Thursday, June 18th. Let's do a little daily video here. Taking a look at the Nasdaq. We are trading still in the same range that we've been for the last 3 days, I think. So just keeping an eye on it. I mean, look, around this 10,000 mark keeps getting rejected, and we're not seeing a lot of bullish strength above that. As you can see, we're still in this trading range here. This was our overnight low. And you can see that we moved higher in the morning and then we pulled back, tried again, and we're in this tightening trading range here at this point, okay? So honestly, we're looking at the overnight low as support and the low of today so far as support here. So we'll see what happens throughout the afternoon. And yeah, there was a bit of opportunity this morning and we'll try and go over that, although it was very boring in this sort of trading range. So right off the open, let's try and do a little replay here. All right, well, apparently you can do a bar replay off of a futures chart, so let's use this QQQ here. All right, take a look at that. You can see that right there, pretty clear, right? That's the low of yesterday. All right, so we're looking at 242.70, and the overnight low, I calculated it would have been around 241, just above 241, okay? And we did test that overnight, however, we did not get there. So let's zoom in here, and we'll take a look at what happened off the open. You can see that we initially moved down, back up, and we're testing this sort of resistance around this 243.75. We hadn't tested 44 yet, so you'll see how we went up to test 244 and we stayed within the trading range pretty quickly. You can see we resulted in a bear break. So this is trading range price action, and it's good for scalping, honestly. And I think I did take this one right here. All right, so right here, that was the opportunity to fade the thing right here, where we saw it pop up into the higher 80s and then we came back down below 80. That was a nice fade right there. And again, it looks the same right here, where we pop above 244 and fail that thing and come down into the mid 243s. So again, it's a similar sort of idea. You can see how we tried to break higher another time here above 244 by a couple of pennies and then resulted in a bear. So again, you could have been fading these failed breakouts for some nice profits. That time you got a two leg down around 10.20. The second leg down here, this was a pretty obvious trade. If you were watching the tape, you would have seen this right here, where the contract kept ticking up to the 70s and it kept getting rejected at that price, okay? And on the Qs, it would have been in the 243.60s right around here. And on the futures contract, it would have been 970. You would have seen how it kept ticking above that and getting rejected multiple times. So that was very apparent. If you were reading the tape, that was a pretty low risk short. Could have been risking about 10 points, stops above here, and obviously you can see I shorted this one and I got my 10 to 15 points profit on that one. After that, it gets a little interesting here because we had this sort of thing right here. You can see we're kind of consolidating. The bears are having a hard time kind of pushing this lower here at this point. And I was watching the 243.20s on the Qs, and again, another tape reading thing where we would get some bear breaks by a few ticks, but every time it would get rebid back up to the 20s. And I saw this happen at least 6 times, where we get these little bear breaks here once there. Well, that was the first time. And then we have another one, and we're trading below the 20s. We're not trading below 243. It kept getting rebid back up into the 20s easily, right? So I'm looking to get in front of those buyers as long as they hold. So I got in long there, obviously with a stop near these lows, and then something happened, one of those news reactions, and then stopped me out. So this is the type of thing, guys, again, you need a stop for this. If you don't have a stop, you're gonna get roasted, because like, look, one day there's gonna be some news, you're long over here, this thing's gonna drop 200 points in 2 minutes, and then you're gonna be down 200 points, and then wonder why the hell you didn't use a stop. I know they say this in every freaking video, but I keep reminding you guys. So anyhow, we dropped and then we regained it. As soon as I saw the buyers come back above 20 on the Qs, 243.20, and we were bidding and bidding and bidding, I got long again, and we managed to pop all the way up here, squeeze out these shorts. And that was the move I was looking for originally, but we had to have this nonsense before getting this. So at least I managed to get out with a profit on that one. And then after it was pretty choppy, I believe. There's another interesting trade right after here. We'll just go over that real quick. So take a look at this. This was the same idea. Let me forward this chart as well. So you can see we broke to a higher high, no follow through, and we're coming down. Now right here, ignore the bull break, right around here, around 243.30s, 243.40s, and the 50 mark, kind of where we were originally holding the resistance. I was watching these buyers here around this general area, and there was no selling. The selling was very much drying up at this point. I thought it was a decent setup for long, and just looking at the chart from an obvious perspective, you can see these two higher wicks here, 1, 2. So it just makes sense that with those two obvious wicks, that if the sellers can't push this below these prices here, these 50 marks here, then we're likely gonna at least try again to move higher. So I got long in front of these buyers here that were holding this price up, and sold as we broke that resistance. So I had my sell limit probably about a point above this resistance up here. And then after that, I was just messing around with orders and stuff. So yeah, we did continue in somewhat of this mini uptrend here, but it didn't last so long, as you can see, because we trended lower after that. So we're still in this trading range here, no apparent action. And again, we're gonna see how this develops into tomorrow. Remember, tomorrow is quadruple witching day. There's a lot of options contracts, futures contracts, index options. Basically, all of the contracts expire tomorrow. So expect some crazy volatility. I won't be trading. I mean, as you can see, I'm not even live trading here, but definitely if you are trading, use those stops, keep that risk super tight managed, be super picky with your trading setups. Don't be just throwing money at the market, because you know some of these moves are insane. You know, if you don't use a stop, one day is going to happen where you forgot to use a stop and then the market moves 100 points out of your favor, and what just happened? You know, you don't want to be involved in those kinds of moves. So keep your risk nice and managed. I'll just make a couple notes about the adjustable stop feature in TWS. Now again, I've been talking about this every single video so far this week, but again, I'll talk about it again. So one thing I noticed is that when you put in your bracket order in TWS, okay, you can move around the order easily. Now, once you fill the order, you could move your limit order up and down. You could move your sell stop up and down, but there are limits to where you can move them. I'll just come up with a hypothetical example. Okay, let's say I'm long the market right here. I want to move my stop to break even. So what I can do is I can simply move it to break even. Now I'll type in my break even price, which is 90, 70, 75. I'll type that in, and you can see that it's only able to bring it up to 2 ticks below where my break-even point is. I'm not able to actually move this stop above the price that I entered. And I think that that's due to the apply offset to parent feature that I'm using here to make the bracket order all linked together, so the orders move together around, okay? And I think that the reason why you can't move your stop above your break-even point is simply because of that. Now, you could move your stop below, lower than where you had it, but you can't move it above your break-even point, okay? So the solution for this, you just want to put in a separate stop order, that's all. You don't want to have to worry about it, because just remember that when you have your bracket order set up, this stop in your bracket order, whatever it is, if it's a buy stop or a sell stop to get you out of your trade for a loss, you can only move it up to like just 1 or 2 ticks below your break-even point. There's some reason the bracket order system doesn't let you move your stop loss above your break-even point. So in this case, what you're going to need to do is just prompt a separate stop order, and that separate stop order, you can bring it anywhere. So let's say that you bought the market here and now it's trading up here, and you want to protect your trade by putting a stop here. All you need to do is get your stop in and put your stop up there, whatever, and that separate stop order is going to be used to protect you. So you know, I'm on a journey to try and automate this as much as possible, but I'm understanding that there are limitations as to what you can and can't do here. Yeah, guys, let's just keep it up. Last thing, I just wanted to show you guys my tape here. So this is what I'm working with right now to trade the Nasdaq. So as you can see, I put the Q's tape side by side with the futures contract tape, and generally I'm looking at them at the same time to analyze the flow of the market. Now I'm going to do some videos on tape reading in the future because there's a lack of the content on YouTube, but at the same time it's kind of like a niche thing and it requires a lot of practice. So I'm not actually sure if I'm going to post a lot of tape reading content for you guys, but I might post some. Now, a lot of futures traders use more advanced tape reading stuff, like they'll use the jigsaw technology, which I'm interested in actually looking at, which is a type of thing where it will show you the consolidated amount of contracts that took place at the bid and at the offer for each price, and it's kind of cool. It has a ladder, whereas here I can only see if the contract's trading on the offer or trading on the bid. And that's the limitations to this, but you can still tape read effectively with this. There's certain things that are quite obvious when you're reading the tape. Like for example, if you're watching the market tick higher and higher, and then all of a sudden you see a whole bunch of prints coming through at one price, and the market kind of has trouble getting above there, where you'll just see a flow of prints happening, and they're all on the offer, right? They're either going to be white or green. White means they're inside the spread, that is, which means that somebody's providing liquidity at that price, so, and stopping that price from moving higher because they're just sitting there absorbing all those offers. So you can see stuff like that on the tape. It's pretty obvious. It's just a matter of learning to know what you're looking for, and that's pretty much it. So this is the setup I'm working with now. As you can see, I don't even have depth on the futures data. Honestly, I don't think I really need it because I'm not really interested in seeing size on the order book, but whatever, I'll probably get it. It's free with IB anyways. But that's pretty much it. I'm more concentrated on the bids and the offers and the flow of the tape and what's happening on the bid or what's happening on the offer. And that's pretty much it, guys. Keep that risk managed, and I will catch you guys in the next video. Take care. Bye.